Summary. Delta has put to rest concerns about a quarter marked by severe storms and rising oil prices. Revenues grew the most since Q4 14, and the EPS beat could have been more robust if not for the one-off, storm-related events. I continue to find Delta potentially enticing buy for the long term. Hurricanes, rising oil prices. None of it stopped Delta Airlines, DAL, from posting a solid Q3 17 this Wednesday. The results put to rest concerns that I had raised a couple of weeks ago about what could have been a tough quarter for the Atlanta-based company, the first major airline to report earnings this fall season. Credit Panorama. Delta by the numbers. Revenues of $11.1 billion barely topped expectations by a thin $20 million margin. Although this was only the second top-line beat in the past 8 quarters, the plus 5.5% YoY improvement that Delta delivered this morning had not been seen since Q4 14. Adjusted EPS came in at $1.57, ahead of consensus by 3 pennies after average estimates had come down from $1.59 in the last week and a half leading to earnings day. Source: DM Martin's research, using data from press release. In the YoY comparison, see table above, the bump in revenues was driven by better per-seat mile revenues, higher capacity and increased load factor, an all-around improvement that bodes well for the health of the airline industry. The large mainline domestic business was up a solid plus 6% YoY on increased capacity, with Latin America international revenues up an impressive plus 9% on much better yields.